Wonderful good day, ladies and gentlemen. We are at the Dolder Grand Hotel, still here at the event of the Zurich Invest. And with me here, a very famous person from the mining, I would call it, from the mining scene, Bob Quartermain, who is the chairman and CEO of Pretium Resources. And we want to talk, of course, about his fantastic company. Bob, thank you very much for taking the time. First time on Commodity TV.
Yes, guten Tag. Thank you very much.
Thank you. Pretium Resources, can you give us a short idea about the company for our viewers?
Right. Pretium was started 5 years ago. We incorporated it to focus on the high-grade BRUCEJACK project, which is located in northern British Columbia. At the time, we had some high-grade drill core, but it wasn't until 2011 that we actually drilled off and started to find the high-grade mine, which is currently there. So we now have about 7 million ounces of high-grade gold, running about 15 grams, about half an ounce of gold per ton, at BRUCEJACK. And so we have one of the highest undeveloped gold projects in the world. It's fully permitted, fully financed, and hopefully in about 15 months from now, we're producing gold from it.
Wow, fully permitted, fully financed, that's the best what could happen. Who financed mainly the project?
Well, the project recently was largely financed by way of a placement which we did in the fall of last year in September. We were able to do a loan arrangement with Orion Mine Finance and Blackstone Tactical Funds out of New York. And we raised a total of $540 million US, and that was made of three components. We had debt for $350 million. We had about 7.5% interest rate on that. We did a $150 million stream, which represented about 8% of the total silver and gold we're going to produce. And we also did an equity financing with them for about $40 million. What's good about both the loan as well, the stream, is that we can pay them back. And so we'll be able to pay the interest the interest as well as the loan back at some time. But more importantly, on the stream, it's fixed. It's fixed at either 8% of the total gold and silver that we produce. So unlike many which go on the life of mine, ours is only life of reserve. And then we have the right to buy it back at any time over, let's say, the next 3 years, as long as we give them a 15% rate of return. What that means is any exploration and upside we have beyond the current reserve of, let's say, 7 million ounces accrues to our shareholders.
Oh, perfect.
And so we're able to do a financing in somewhat of a tough market last year because of that. And then earlier this year, we completed a capital cost update for the project showing we needed a total of $696 million to complete the construction. With the $540 million we raised, we did another overnight marketed transaction in February and raised an additional $146 million, both by way of the marketed transaction and some participation by our shareholders. So as I said, we're now fully funded, and of course, because we're fully permitted, we're well under construction.
And it means also, exactly, you're fully funded. That's very important, I think, because I would say another, after financing, it's maybe not that good for the market.
That's right, it could be, for sure. Yeah.
But let's dive into your wonderful project. Yes. I mean, I saw at your website also you have, for, like you said, over 15 grams per ton. For the first 8 years production you are estimating, and then it goes down a bit to 14. What is the reason for that?
So at the project itself, so the first 10 years we're producing about 500,000 ounces a year, and then after that we then produce about 400,000 ounces. The reason is that the deposit is split into two. We have the new Valley of the Kings discovery, which I mentioned was found in 2011 by our geologists by drilling it. We've outlined 6.9 million ounces in the Valley of the King. There was a legacy project there called the West Zone, and it has more silver in it. So it grades about 6 grams of gold per ton and about 296 grams of silver per ton. So as you evolve the mine life, we start moving from the Valley of the Kings over to the West Zone, so we produce a little bit more silver, and also the gold grade will drop down, but that's why we'll produce a little bit more gold. But I think more importantly and exciting is last fall we did exploration drilling, and we hit one hole, which was hole number 666, and we drilled 1.5 kilometers deep, and 1,266 meters down the hole, we hit 8 kilograms of gold in the drill core. So very similar to the gold we have at surface. So we think we'll be there a lot longer, which hopefully will produce good gold for many, many years beyond the 18-year mine life we currently have.
Great, fantastic. So that means you have already the chance to really enlarge and prolong the mine life, right?
We do, with that drill hole. We drilled 6 holes last year. all of them hit gold, but more importantly, hole 657 and 666, if your readers or viewers go on to our website and look at it, showed we drilled quite deep below the current resource that we have in current reserve and hit more gold. And so that'll be good for a long mine life, yes.
Yeah, fantastic, great. As we saw in the first quarter, one of the largest appreciations in the gold price, which helped the whole industry, of course. But beside that, what are the projected AISC cost, I mean the all-in sustaining cost,
Right.
and where are the all-in costs in your project?
Right, so all-in sustaining costs for a project, which would be basically all-in costs, we're looking at about $448 per ounce.
US dollar.
US dollars per ounce, so extremely low. And again, that's all on our website. And that comes from the feasibility study we completed in 2014. And so when you look at that aspect, it's going to be very attractive. When you look at the capital cost, we're looking to build the project and take that into account. At an $1,100 gold price, our project provides about a 27% rate of return back to our shareholders and gives a discounted 5% net value for the project, about $1.5 billion. So substantially more than we're currently trading at. So again, the very high grade certainly makes it an attractive project that way.
Yeah, definitely. No, that's really fantastic. I mean, I saw also the construction should be finished by 2017 latest.
Correct.
So that means the first, put it that way, commercial production can start also in 2017, right? Or do you have still then another ramp-up phase?
Yeah, no, we're currently constructing now. We have over 400 people up at site at the project, which is in northern British Columbia, about 1,000 kilometers north of the town of Vancouver. And it exists in an area of previously mines. The Eskay Creek mine is there, the Premier Silback mine. So we're in an area where there have been previous mines. And so we're going to work on putting in our permanent camp. We've started the foundations for it, and we should have a permanent camp for 330 men in place by the summer. And then what we started, the foundations for the mill building. So we'll get the mill building constructed over the course of this summer and framed out, and then through next winter we'll put all the materials inside the mill building. At the same time, we're constructing a 57-kilometer power line. And we're also doing underground work. We're advancing about 20 meters per day underground with the underground development. So those four things are all going on simultaneously now, with the target that by June, into the second quarter of next year, we should start the plant up and start putting material through it for production. So that'll happen in the third quarter of next year. So the summer of next year, you should start producing gold from it. So
Fantastic.
15 months away, which is pretty exciting.
That's very, very close, absolutely. Of course, as we talked already about the value of the shareholders, can you imagine that you also will pay in the future, of course? First, you have to show the production, everything is right, that you will pay a dividend maybe?
That's what I would like. You know, if people check, I own about 2.5 million shares of the company, and management owns about 2%. And we did that at market prices. So my share price is at $10 and $6. And so our interests are very much aligned. And it's going to have to be a board of directors decision, but you're quite true. If we're up and generating the kind of cash that we think we will from this project, because we also anticipate, I think the gold price is going to go up, then as a sizable shareholder, I'd like to see a dividend payback. You know, we can continue to add to the project itself by doing the drilling, expanding production possibly, and of course going down dip and finding more gold on the project, so we don't have to look outside the property to add value for shareholders. But I think it's incumbent on us to look at the money we're going to generate and pay some back to the shareholders who are the owners of the company.
Absolutely, because also if we are now not 0% interest world, we are in a negative percent interest world. So I think dividends for the future, also for the successful company, is key.
Right. Yes, I totally agree with you. And that's how I do some of my own investment strategy, is look for companies that pay, it maybe not be large, 2 or 3 or 4%, but if shareholders are going to take the risk and invest in you as a gold company and help you get through this time period, then I think they need to be rewarded for that investment, and paying a dividend is something that I would support as as chairman and certainly as a shareholder.
Absolutely. No, I really like this approach, because we have still 2 less companies doing that, and I hope it's getting more.
Yeah, for sure. I agree with you.
Last question. Where do you want to see your company, let's say, in 3 or 5 years, meaning like something like a blue sky potential?
Right. Well, we want to be in production, and so we're going to achieve that next year.
For sure.
We want to ramp up and do it, and I think beyond that, we want to look at the scalability. The fact with that drill hole, we've shown there's much more potential for more gold there, so to what extent can we expand the operation, and then as you point out, be paying a healthy dividend back to our shareholders. So it's really focusing on the communities in the north, the relationships. You know, we're an area of First Nation activity, and so we have good relations with many First Nations in the area. They provide a lot of services to us. We have impact benefits agreement in place with them. And so we want to be a solid contributor to the communities in the northern part of British Columbia and seem to be a good employer in that regard, but then also provide a return back to our shareholders by hopefully finding more, but as you point out, possibly expanding the operation that we currently have and being able to enjoy what we hope will be a much higher gold price as well.
Yeah, fantastic. Higher gold price as well. I love that.
Yeah.
I'll be on the same page.
Good.
Thank you very much for that.
Okay.
That was a great first start at Commodity TV. I'm sure our viewers will really like that because you're a great company. And thanks for taking the time.
Okay, Dankeschön.
Danke.
Okay,
Bitte schön.
okay.
Bitte schön. Ladies and gentlemen, that was Bob Quartermain, the Chairman and CEO of Pretium Resources. And yeah, you heard of the BRUCEJACK project. It's in British Columbia. This is, I would call it elephant territory for mining. It's definitely one of the best jurisdictions in the world. And the guys go in production, definitely. It's for approximately 12 to 15 months from here. 500,000 ounces per annum. They start in the production on the first 8 years with over 15 grams gold per ton. Then it goes a little bit lower due to the higher silver part of it, and it goes down to approximately 400,000 ounces per year, but still great 18 years of initial mine life. And as we just heard from Bob, it will be much more. So great future for the company, fully financed, fully permitted. That's what we like. Thanks and bye-bye from Zurich.